So, hello, and a massive hello to everybody. Here we go for another one of these Substack videos. No trade calls or recommendations are responsible and stuff here for educational purpose only. So, what's going on here? Well, basically, I thought we'd look at NQ. Our roadmaps on SPX, gold, DXY are all pretty much in play, and I've looked at those a lot here in the free videos. So, I thought we'd look at something a little bit different here. So, looking at NASDAQ. So, where are we here? So pretty much, I'd say we got one of the most obvious longs off these recent lows here at the end of the month, and stalling. Right, we discussed this yesterday. Also, we're looking for a move all the way back into the 50-day moving average and the confluence of this descending channel. And then once we had that reversal, now it's time to potentially look for shorts. Where are we and why is this level important? Well, we got a couple of things going on. Now, here, essentially what's happened is we've moved all the way back into the top of this channel. This is 2 standard deviation, this is 3 standard deviation, and we've got the confluence with the 50-day moving average, this previous all-time highs, this gap zone. So right now, we have a window for the shorts to come in and hold this downside rotation. Clearly, there's ample discussion from the bulls, and it's valid bull case that nothing's ever going to change. There's no way they're going to let this go down. The Leopold bottom is in. Everybody's going to step in. There's no way they're going to let this fall ahead of midterms, and makes sense. And also the bear case is, well, here we just had a little bit of a tactical bounce off the the end of the situational awareness liquidation, a little bit of a panic, and the fact that Washington, Tokyo came in, all the headlines, another taco from Trump pumped this higher, but essentially nothing really has changed. So we still have to unwind, and after this big unwind, people are not going to be as gung-ho about trying to YOLO names, not being so gung-ho about going into double, triple, quadruple leverage ETFs. So really, this has to come back down. Now, I would, as always, look at a more balanced view and focus on the technicals. And the way I would be looking at this is, well, here, we've had a very nice tactical bounce. We've moved back into key upside references, and how this behaves here is going to give us clues on the on what's coming next. Now, keep in mind that if you're going to flip it back, just to give you a bigger picture reference, going back onto a monthly view, right? Well, what you can see here is that essentially the market is stuck between all-time highs, and you see how that low stick saved the 10-month moving average. Now, the 10-month moving average is a key moving average for market timing. And what could argue, well, since nothing really has changed, and even though that bull case or the bear case we discussed are valid and have points, well, maybe there's a third option, right? And the third option is that nothing really is going to change ahead of midterms. The boundaries have been set, and there's no real reason for the market to break out above all-time highs or to break down below the panic stick save low. And I think a lot of people always forget about the third option. Everybody thinks up or down, but they don't think about sideways. But what I would just say is that, it makes a lot of sense. Again, you can make a good argument for the bull case, for the bear case, but I think there's also a very good argument for the neutral and inside this range. And don't forget that these wide ranges are extremely tradable, right? And a lot of time you don't have to have a view. You can just continue to focus on the range. Now, going back to the daily, this is fairly simple as far as I'm concerned, right? 30,000 pivotal bull bear line. Let me just get those 2 references back. So 30,000 pivotal bull bear line, day closes above. And keep in mind, we've got non-farm payrolls coming in, and probably even more important, next week we have that CPI, PPI data coming out. If we close above that then my base case assumption is that the market is going to continue to squeeze, and like everything else is going to try and go for those all-time highs. You know, ES printed all-time highs, YM printed. Market's going to go from those all-time highs, and the next key reference point is going to be that all-time high, and that's going to be the next key bull bear line. But as long as we hold below, then the base case is that we could easily be coming back all the way into the 200-day moving average and this low. Now, keep in mind, I'm switching back to orange. This is that broader chop zone. We're still in a big chop zone, and it's very tradable, right? Now, clearly inside this range, mid-channel is going to be important. But again, I would focus on the broader zone. Also, don't forget, if you want to, let's look at this on the Qs, that this impulsive move has left an awful lot of poor structure to the downside, right? Big gap, big gap, big gap, right? So if we get a little bit of downside traction, you know, there's a lot of poor structure to fill to the downside. Also, the bears do have an opening here because of the seasonal window. We'll have to see what happens with Trump. We'll have to see what happens with more earnings. We'll have to see what happens with the general flows, but also the seasonal window is interesting for the bears. So going back to what we discussed right now, the bears have a chance. Don't forget that even if we do come all the way back down to the channel, bigger picture, bigger picture, this is a broad chop zone as defined by that recent low around the 200-day moving average, the all-time high, big chop zone. But right here, the bears have a chance, and look for this for a potential move all the way back to the downside. Now, could you see a move back into mid and then a hold and a rotation back higher? Sure, right? That's that mid of that channel. That's going to correspond to the 50 back of the recent move from A to B. So as always now, you know, the reference points are the highs, the lows, and the mid of the channel. You've also got a 10-day moving average coming in here. You got a 100-day moving average, which is going to be interesting. But rather than the moving averages here, I think the channel is going to be an easier guide. So don't forget, above 30,000, looking for all-time highs. Something substantial has to happen, I think, to find buyers pressing and buying above all-time highs. As long as we can't take that out, the bulls have a chance for a little bit of a correction inside this zone into the channel, at least into mid-channel. That's a bull bear line, possibly into the back end of the channel. But broadly speaking, this is still a broader chop zone, and things would get very bearish if we trade back below the 200 DMA, back below, break down below this channel. And at that point, you'd be looking for the market to try and come back and correct all the way back into April lows. Okay, hope that was useful. Wishing everyone an awesome one. Talk to you guys soon. Take care. Bye-bye.